All right, hey everybody. Thank you everyone for coming to the Sports and Tech Meetup, Investing in Sports Ventures. All right, really excited to dive into the discussion. But first, before we do, I wanted to give a big thanks to everyone who helped put all this together, mainly the sponsors. First of all, big thanks to the awesome folks from Stripe, Sports Data, Onside Sports, Play On, Buyer's Best Friend, and Pogo Seat. Just to give you a run through of what all our wonderful sponsors do. Stripe is a developer-friendly way to accept payments. You guys probably already know them. Literally, my startup, they have never sponsored us before, but we still use them. So I would recommend them. Sports Data has actually stepped up to be our sponsor for the year, which is great, so we can continue to do events like these. They've set up a set of real-time live sports APIs, and if you use the promo code SFSportsTech, you get 20% off their real-time plans, so check them out. Onside Sports, the guys are over in the corner there. They're an SF-based mobile prediction community. They've generated over 1.5 million predictions since 2013. And they leverage real-time scores, live odds, and advanced matchup stats to create a valuable utility. Finally, Play On Sports. They are up in the front row over here. They are hiring vigorously, I'm told, and they deliver athletes, coaches, and teams, amateur athletes, coaches, and teams, a private sports-centric platform to communicate and highlight your sports season athletic participation. And finally, Buyer's Best Friend is over on the left, and they're providing the yummy snacks. And they're a leading source of healthy snacks, and I think if you like their snacks, they'll provide them for your office as well, so talk to them. Finally, last but not least, the guys from Pogo Seat have provided a promo code. If anyone uses the promo code SportsTech25 and you go to the Giants game, you'll get $25 off your next seat upgrade. So you might as well use that because it's a free upgrade. So that's terrific. Anyway, thanks to everyone. Dave was really helpful with the sound system. Kat from Stripe has been extremely helpful in putting this event together. So much appreciation to them and everyone else I forgot. All right. Now, in terms of the next event's going to be on June 4th. It's going to be about innovation in soccer. It's got some really cool people. It's got Eric Winalda. It's got Dave Covell, the president of the Earthquakes, and it's got Mitch Lasky, who's a VC from Benchmark, and a couple soccer startups. So definitely come to that. And now, without further ado, our panel about investing in sports ventures. To my left, just to introduce the speakers, we have Kerry Kellogg. Kerry is the director of new business development at RC Ventures. To his left, we have Buck French. Buck's the co-founder and CEO of Fantex, which just I believe completed their first IPO yesterday or a few days ago with Vernon Davis. He's the former general partner at JP Morgan Partners, and he's a fan of the San Francisco 49ers, except when they play the New York Giants. To his left is Mark Wan. Mark's the managing director at Causeway Media Partners. He's the managing partner at Three Arch Partners, and he's the co-owner of the Celtics and the 49ers. And to his left is a last-minute replacement who we're really glad to have, Tracy Hughes, who's replacing Dave Nemitz. Tracy's the CEO of Silicon Valley Sports Ventures, and she built up and ran the sports practice at Cisco. Anyway, I've done enough talking, so let's hear what you guys have to say. To start, all of you guys are investing in sports in some way, shape, or form. What are the most attractive areas for you guys from an investor's perspective? In what areas would you be unlikely to invest? And anyone who's passionate can start.
First? Sure. I'll be very passionate. So areas that we at RC in particular are interested in are kind of owning and operating teams, leagues, properties, and IP. And so that's a lot of our main focus, building up content either organically or buying into it. And but since we're focused on startups, I'll say the area that we're really interested in the startup space, and almost everybody in the sports world touches on it, but is CRM and really understanding from team ownership standpoint, who the people are who are in the stadium, who the people are who are interacting with you, whether it's, there's a great landscape of applications, whether it's gambling or it's second screen or whatever it is, but who those people are who are buying your merchandise, who are buying your tickets, who are engaged with your fan base. And there's not a great platform currently that's aggregating a lot of that data and distributing it back to the content owners. So that's, in the startup space, an area we look at closely.
Since we've built a platform that allows you to invest in the cash flow stream of professional athletes, I'd say I'm fairly interested in people investing in professional athletes. At the end of the day, we think that if you can actually link that cash flow stream to the general public, that will make them super fans or advocates for the brand. So ultimately, we think that's the next generation of how fans are going to engage with the players.
Just to follow up with that on a quick second. So I completely understand why being the platform where all that's traded on would be a lucrative opportunity. But from the fans' perspective, is your perspective that fans should be going in there thinking, okay, this is a great way to sort of see ROI on money, or is it more of like sort of a fun thing to do as a way to invest in people you have an affinity for?
It's absolutely, we believe that it creates an opportunity to make money. If we just did it for the fan experience, then at the end of the day, we wouldn't have a sustainable business. So in Vernon Davis's case, we acquired estimate his future cash flow stream about $61 million, and we bought it at $40 million, right? 10% of it. So we believe there's a built-in ROI there, and then our business is to help enhance that cash flow stream even further. So at the end of the day, it's about investing, but in a cool way.
That makes sense.
Yeah, for us at Causeway, we're a professional investment fund that's focused on everything sports related. The one thing we don't do or wouldn't do is teams, because our partners that are in the fund, we own NFL, NBA, NHL, on to MLS, all the way down to professional lacrosse. And so because of the league conflict rules, we can't do teams. But beyond that, we're broadly interested in things that touch on content, IP, technology, events, and we're just open to good businesses that are sports related and can benefit from really our network within team ownership and media relationships. We have a number of our investors, our limited partners, who own and operate some of the larger media companies in this country too.
Thank you. From our standpoint, we look at social, digital, mobile ways for the fan experience to be optimized. We also look for things that are business relevant to the actual operations of a team or a league. So business relevancy for front office or league operations, very different than the team focus that Mark just referenced. No competition or conflict there for us. And then also just leveraging the Cisco experience, any venue optimization that can take place for venues, either virtual or actual, so stadiums or events that require some unique needs. And then lastly, aspects of sports performance. So anything to make the talent stronger, faster, or more valuable.
Okay, I think one of the things that was really interesting about your last three responses was Tracy kind of mentioned a lot of the themes that you hear, in this sort of tech press, social, mobile, and basically everyone else said, okay, owning content is what seems important, or owning, the athlete who's, I guess, linked to the content in some way. Does that mean, how do you think your investment thesis is changing with technology? Is this a reflection of the fact that there are, say, more buyers on the media side and fragmentation, and that rights are more valuable? And does mobile play into this, does social play into this, or do you guys think your investment theses are even simpler than that, just that kind of content rules at the end of the day?
We think content is extremely important. My partners and I, we bought the Celtics a decade ago, and we thought we were buying a basketball team. What we really found out was we were buying a media team. More than half of our revenue is from media, whether it's in a digital format or it's off for the regional sports network or it's through Turner and ESPN. And the same would be said about the NFL, which I'm also a part of. We did $10 billion in revenue last year, $6.6 billion from media, 2/3 of the revenue. Content is really what's driven that. And that's not a new phenomenon, but it's becoming ever more important because sports, as I think everyone here recognizes, has become one of the last pieces of content that people want to consume live. And therefore, it holds a unique and inherent value. Sorry? So, yeah, okay. I didn't want to overwhelm the people up front. It's kind of loud even to myself. So we really think that content is important. What's happening with technology is the way you consume it has changed. And I think for the better, in many ways, it's opened up a lot more opportunity. Not only is it opportunity to consume that content that has historically been on cable or satellite, but now you can consume content that would never get the access time on a satellite channel, right? Because it's a sport that just not enough people will watch. You can't pull in a rating on a Sunday afternoon or even a Thursday night that would warrant Comcast, Time Warner, whoever they're going to be, putting you on their network. Technology has allowed that through over-the-top and mobile distribution to open up call it the long tail of sports. And that's really pretty exciting and I think a great investment opportunity.
I would add, in concert with the live events and the media that surrounds that, incredibly powerful, incredibly valuable, as we know. A lot of the exits that got the high numbers were certainly media plays. But I also realize, and part of our approach is to look at the empowered fan. And now with the tools that we all have in our pockets and we're using constantly, arguably the remote controls of our lives, these mobile devices create an empowerment and a sense of expectation for the fan. Content needs to find them and follow them on their terms. And I certainly know as a longtime season ticket holder of the Niners how great it is to feel that personal relationship. Niners. But that's, I think, something with the inflection of technology and the rise of digital and social aspects, the shiny aspects of the applications that are being developed probably right in this building and beyond can certainly address a lot of those issues where there's personalization and real-time delivery of meaningful content and things like that. But I really see there being a distinction between the protected rights that are the most valuable of those live events and then all of the ancillary layers of content that might be a little bit more free and might be user-generated and might also have some increased value going forward.
Who follows Vernon Davis on Twitter, Instagram, or Facebook? Okay, for those who didn't raise your hand, you need to get on it. Secondly, for those who did, we believe that the future is this micro-audiencing around sports figures, entertainment figures. They are creating content today that maybe 10% of you follow, just on a Vernon Davis's case. And last year, the product placement industry, for example, was about $4.5 billion in the United States. Vast majority of that took place through movies and TV. We think that in 3 to 5 years, you're going to see product placements in other ways going along the ways of these athlete brands and the little micro audiences, in this case about 10% in here, and that's a whole new media feed. And so just that content that the athletes are creating, we see as a huge opportunity going forward.
All right, one of the interesting things that I think has been kind of identified in sort of the emphasis on content early here is sort of the value of being the league as opposed to trying to have to work with the league, which is a little bit different than Fantex where you're creating relationships one by one. What are the sort of key challenges and best practices around doing that? Because, I'm talking to people here. I've heard nightmare stories and success stories. It seems like you guys at Fantex have done a great job and built. I think John Elway's on your advisory board. You built, a great board. On the board of directors, a great board that's probably helpful with that stuff. But what are the best practices? How can entrepreneurs say, I want to work with a sports league? What should I do? Or is the answer from investors, don't, it's impossible?
Sure. I think it's very difficult. The most successful companies we work with tend to start in other verticals outside of sports, and once they've proven a model, can then bringing in the sports space. Within sports, you just have so many conflicting things, either whether it's team to team within a single league or league to team within a single group. I mean, there are baseball teams that don't like working with BAM, and so you think BAM has this reputation of being a thought leader and forefront of sort of all things technology, and they certainly are. But there are conflicts within the kind of the team league relationships, and it's very difficult. So I would say if you're going to approach it, I would suggest getting your traction elsewhere and then bringing it into the kind of mature sports world. So start with either a lower tier league that it's easier to get access to and is going to be more open to trying new experiments, so you can prove your engagement, prove your traction first, or start in consumer product goods space and then bring it over. And then within the leagues, blanket everything. And the number of people who come in and say, "Oh, I'm talking to a guy who works in New York Jets," like, we're good. It just doesn't work that way, because even if you have a team in, you want to get as many touch points across teams and leagues as you can.
I think those are good comments. The piece I'd add about working, with professional teams at the highest level or the leagues is make sure that, it seems simple to say, but it really is a win-win. Too oftentimes, I think the small companies come in and assign or attribute too much value to the team or league, and they're paying or expecting too much. They're not a panacea for your needs. They can be a great partner if the deal is set up appropriately and what you're bringing really helps them and what they're bringing helps you. But you see time and time again, these young companies, they'll give equity and they'll pay fees that just aren't commensurate with the value that they're getting from the league or team, and that leads to a disappointment, frankly, oftentimes on both sides. So I think it's kind of an eyes-open, realistic view that's required to make these work.
And I would add that it's critical to make sure that you are solving a real business problem, an identified problem, that you can validate that either with other teams across a league or multiple teams across many leagues, so that you're not just coming in armed with your really good idea, but rather you're solving an identified challenge for a particular team or a particular league, holistically all the teams in the league, or more generally the sanctioning body or the league itself. And I think that doing so, you'll prove business relevance. And it also it's a who's who game. You're going to need to know the right person and be able to solve their pain point. So part of it's access, the right decision maker, and solving the right problem.
Okay, so drilling down into, because when you say, you need to prove you're solving a problem or solving a need, I think probably every entrepreneur in this room who's working on a sports tech startup feels like they're doing that. So sort of drilling down into that, and this is sort of a chance for you guys to plug your own portfolio if you want. What are sort of examples or specific criteria of what does that look like when you say, okay, now I can write a check because I'm convinced that these people actually at this stage are solving a need? How's that look? And this is for anyone.
So the NFL's a $9.5 billion company. So think of it as if I'm going to call on, I don't know, Cisco or Yahoo or whoever along the valley, Oracle, these big companies, you're just a little nit to them. It's not good or bad, it just is, right? Everyone only has so much time in their day. So what makes you special, right? They'll spend the time with you if they believe there's value, but to Kerry's point, if you haven't proved value, don't think you're going to prove it to a $9.5 billion company, right, at the end of the day. So that's just like entrepreneurship, starting a business 101. And then it depends what you're doing. Like at the end of the day, if the league's going to see it as potentially detrimental to them, then you better understand the collective bargaining agreement, and you better start with the Players Association, right? And it better be good for the players, because then you'll be okay. If it's potentially a revenue generator for them, then you better go prove your value in some other form so that ultimately then the league will bring it along. But any company you ever start, if you go and think you're going to go sell the $9.5 billion company out of the gate, low probability of success.
I'm sorry, I might have, that's really interesting. But so to this investors, what's the criteria, or what are examples of sort of criteria and stages that got you sold on a company's story and said, okay, now I feel comfortable investing because they had X, Y, and Z?
I mean, for us, the case study I always use is our portfolio company PopTip, which does sort of real-time polling within social networks, natural language processing to scrape and then add demographic data around comment sections and feedback, kind of real-time SurveyMonkey, I guess. And they had a ton of they came through Techstars and had a lot of traction with CPG companies and had kind of proven out a model, had a proven understanding. And when we met with them, we saw that engagement, saw that traction, and they had steered away from sports because they said we can't do anything there. And that, I mean, for us in this example, we said, well, we can make those introductions and get you into teams, leagues. And so now they work with all the major leagues. They work with a majority of the teams, ESPN, that kind of thing. But it was because they had those case studies that they could show up and present to people. And then within sports, the other thing, like you said, you're a little knit. And it still is a big relationship play, and that's you mentioned it earlier, and we feel the same way. Like there's an inevitable, unfortunate component of relationship that comes in, and that's where from an RC standpoint we can help.
That makes sense. Let's sort of talk more about the investor side, and I thought there was going to be both Dave and Buck on this, but I know you guys have raised a pretty significant amount of money so far. But you said it's not necessarily from institutional investors yet. What are the qualities, assuming that you might possibly raise from institutional investors down the line or have in the past, that would be value added to you and investors?
So we raised about $33 million from friends and family. These guys turned us down.
Those are nice friends, yeah.
Yeah, good friends.
We didn't turn you down. We
No.
conflicted.
They're conflicted. He turned us down.
The CBA doesn't let us.
Which motivates me immensely, I just have to tell you. We absolutely agree that you, or think that you should only raise money that adds value. So we had a strategy that we were going to go the high net worth path, again, from a network effect for what we're doing. And then specific venture firms that have the relationships that Kerry talks about. So I met Kerry in December. That's when he jilted me right before Christmas. Kid didn't get the G.I. Joe with a Kung Fu grip, but just kidding. Not really. No. So at the end of the day, never raise money as a general rule from anyone who doesn't really add value, because at the end of the day, you can find money if you have a good idea. You can't find money that adds value, then you're kind of probably barking up the wrong tree. So I don't know Tracy, but I know Mark and I know Kerry. They add value. They have the relationships they talk about. And that's something that's hard to replicate, especially in Silicon Valley in the sports industry at the end of the day. It's a very insular world. I'm not from that world. I happen to grow up next to a guy since 4th grade who's extremely well connected in the sports world, and so that helped us out. But otherwise, that you should find people who have the relationships.
That makes sense. Let's see.
Can I add one thing?
Yeah, please do.
So one thing I would add to that is, depending on what you're building, and for what Buck's building, it's a huge idea. If you're not familiar with Fantex, go look it up. It's awesome and it's big. But there are a lot of people who come who don't. There's a culture of like people getting really excited about raising money, and so we see a lot of people who shouldn't be raising money at their current stage, or maybe shouldn't be raising money at all. And so I would really think through that when he talks about don't take money from people unless they can add value. When you're going into those conversations, unless the conversation is, yeah, I'm going to get money and there's this tangible value, I think, whether it's through the portfolio effect, network effects, whatever it might be, I would think twice about that particular partner and then raising money generally.
That makes sense. Okay, so in terms of like thinking about the U.S. leagues, some people have said they're socialist to some degree, meaning there's a set number of teams, there's no relegation like, say, English Premier League. I know there's some people on this panel who are either owners of teams or run part of funds that are owned by owners of teams. So speak as much as you like. But do you think that if there's maybe a different ownership structure, or one that maybe was had greater penalties for sucking, would there be more innovation in sports, and would that make for a better situation for startups?
I'll try to answer that. I'd actually argue the opposite. I mean, I've clearly spoken with my own money. I want to be owners of teams that operate under our system, and it's not just for lack of relegation, but it's a whole bunch of other management oversight and control, salary caps and the like. I've had plenty of opportunities to buy into EPL teams, and I have friends who own them. I think we're in a better position to take risk because we're not concerned. Although I shouldn't say we're not concerned. We care about where we are, if you want to call it in the table, if you're an EPL team. But we're not at risk of being relegated, and losing our share of the media contract. So I think teams over here are in a much better position to try new things, experiment, and take risk because they're not jeopardizing their entire franchise. They're not jeopardizing the majority of their revenue if they end up at the bottom of the table and are no longer in the top league. That's the way I look at it.
I certainly don't own a team, but I can speak to the importance of front offices, ownership groups, even leagues themselves, having a spirit of innovation that would encourage startups and risk-taking and failing and the things that we're so fluent in here in Silicon Valley, because only in doing that do you get the success home runs that come seemingly out of nowhere. We know that there's a lot of hard work involved, but the culture of innovation, I don't think is necessarily catalyzed by the fear of dropping to, can you imagine if the Giants didn't do well and they dropped to the AAA? It would be inconceivable in this country. But at this point, I think that the concept of innovation itself is a disruptive force, and I think that the right type of culture in a front office or a league and even a budget attached to innovation is not a bad idea. I think that is a great launch pad for a lot of innovation because the culture is there on that end. We know that it's here on the startup side. So what I see more as an impetus for innovation is not necessarily fear of failure on the team standing, but fear of losing the big idea and falling behind your competition from a disruptive innovation standpoint where you can make money or deepen your fan engagement.
That's interesting. So thinking about, you guys all see tons of pitches and interesting ideas every day. And a lot of this stuff's really cool conceptually, but from a fan or a player or an owner's perspective, how does this stuff move the needle 5 or 10 years from now, both financially and just experientially? How is my life as a fan or a player or a manager going to be different as a result of a lot of the sort of innovation in this room or the stuff you guys are investing in or building?
Somebody want to go first?
I think it's going to be awesome. At the end of the day, the focus of everything now is on fan engagement. So before, everyone just took the passive approach. Well, they're going to come to the stadium, they're going to go to the game, and it's all well and good. Well, now because of those devices and people hanging out at their home, they have to find new ways in which to make it better for the fan to ultimately experience the product. And I think that's just a positive all the way around, whatever it might be. And the interesting thing is the teams and the leagues are spending the money because they realize they have this huge opportunity where the media buy that Mark speaks about is all going to live sports, right? So there's a huge opportunity, the growth potential. When Roger Goodell says, in 2020, the league's going to be $25 billion, right? And it's at 9.5 right now. So you got 6 years to more than double. There's a huge impetus for them to invest in product and opportunities in which to make that fan engagement better. So I think it's a great time.
Yeah, I'd answer it by saying there's a couple axes here in which we're going to see change. One we touched on, which is the ability to watch sort of the long tail of sports, that there are a whole bunch of sports for which people are passionate about, but which you cannot find on your television today. And they're becoming more and more available through over-the-top and digital distribution. So that's sort of one section of it. The other one is just the emergence of a whole series of new sports and forms of entertainment that are sports-related. Probably the most successful example is UFC. 10 years ago, literally 10 years ago, well, a touch more, 2002, the Fertitas, took that over and started that at a $2 million operation. Today it's a multi-billion-dollar enterprise, right? That wasn't in the landscape 10 years ago. Or you take a look at, and some will question about how much of it is a true sport, but these color runs, right? There were 2.6 million participants in those last year. There were 2 million participants in all of half marathons, marathons, all the other endurance events combined. 5 years ago, there were none of those events, right? So there's a constant innovation of new forms of sports/entertainment and great new ways in which to engage and consume it. So I think it just gets better and better from here.
That's interesting. We'll come back to that question. But so we haven't really talked much about the recreational athlete yet. One of the things that I've heard from a number of investors about sports is a lot of these opportunities are too niche. You know, the TAM, the total addressable market, is too small. One of the really interesting things about wearables is some of these wearable markets are broad, like you said, or if not wearables, you know, recreational sports like the Tough Mudders and the color runs. Is that an area you guys are looking at in terms of this sort of participatory sports stuff?
Yeah, no, absolutely. We've had discussions, the whole sequence of them, both here and in Europe, and everything from endurance to short to fun to, as you said, the mud events, what they call them, or the obstacle events. It's a very dynamic space with a lot of interesting stuff going on.
What do you see as one of the things that I've been looking at those events? What do you like? Obviously, they've hit some kind of, I don't know if it's social or they've hit some kind of thing that, you know, basically people really enjoy them. In terms of thinking about like the future events, because a lot of these aren't really traditional tech plays, and you know, it's sort of hard to really understand what about these products is so engaging or so viral. Like how do you think about evaluating these new opportunities when they don't have 2 million and, you know, they might have 5 races or 50 races at this point? Like, how are you trying to make sense out of these new opportunities?
Well, for us, I would say it's simple. We're not going to do those when they're, you know, they've done one event and they've had 5,000 participants. I wish I could say we throw our money in there and take a chance, but we're much more interested in something that's kind of got a good trajectory already. And, you know, there's plenty of new innovations that are happening. Some of the more interesting ones are done by energy drinks companies. Red Bull is starting new events every year. They have a whole team that their sole job is to start new sports entertainment events each year. So there's just a whole spectrum of new things that are coming along that are really very interesting.
Yeah, and I think all those businesses are platforms on which, you know, you talk about the technology and the social and the engagement is built around. So when you have an event that's at a scale of more than one with 5,000 participants, just like the NFL, you're building businesses on top of it. So that's where the excitement comes.
I think also looking globally at some of the sports that aren't so mainstream in this country, whether it's rugby or cricket, certainly will find their way into, I see some nods of the heads, will find their way into more of a mainstream audience here and domestically. A plug for $1 Million Arm. If anybody doesn't plan to see it, I think it'll be well worth the money. But also other European flavored sports. Anybody here familiar with parkour? Yeah, pretty interesting. If you haven't, look it up. It's a new way to define sport. It's sort of an individual expression, art meets sport type of thing. So creating whole new aspects of competition around a niche like that, I think will be extremely interesting. I think they're ripe for social and digital. I think they're free of some of the encumbrances of media rights and some of the sanctioning body requirements that most sports in this country enjoy. So I see tremendous opportunity when we look at other sports outside of the big 4 or 5 here in this country.
Awesome. This will be the last question for me, probably. So get your questions ready, audience, because we'll do Q&A in a few. So from your guys' perspective, there's a lot of people in this room. Not all of them are building startups, but a lot are, and a lot are thinking of it. From the investor or entrepreneur's perspective, what are the pain points that you would like to see people addressing? Like, it sounds like there's some demand for, as you said, everyone try parkour, try, you know, American handball, and see which one of these new leagues, you know, becomes the next UFC. But what else?
Sorry, could you repeat the question?
What are the opportunities that you would like to be seeing, you know, people pursuing? Like, what are the pain points that would be great to see entrepreneurs going after?
I think one thing that is always a riddle when you talk to teams and even leagues is the integration of all of these great pieces of technology. And there's incremental evolution in technology, and maybe it's faster in places like Silicon Valley. But if you think about it in terms of the person who's in charge of a digital platform for a front office or a team, they've got a lot of integration issues if they start even thinking about adding a couple of new fan amenities from a digital standpoint, or adding a live aspect to their digital platform for an event day. So I would really challenge the group to consider the integration aspects of whatever it is that you're building, because without that, there's going to be friction regardless, and you want to lower that friction. And if there's any way to eradicate it, great. Speed to market, speed to adoption, et cetera, revenue. But that's one of the challenges that I frequently see and put back onto the founders to solve, not in a vacuum. There's a lot of other best cases out there. There's a lot of collaboration. There's some visionary teams that are looking to go forward and beyond what they did last season even. And so I think there's natural places where technology and innovation can accelerate, but it really is an integration challenge in many of the cases that I've been seeing lately.
So I'm going to answer it a little bit differently, because I've been a professional manager of venture funds for close to 30 years. I've seen thousands and thousands, tens of thousands of startups over that time. And what I would say to you is, don't ask me where the next best opportunity is. It's you who should figure that out. My job is not to come up with the idea, nor is it, or would you want me to be the person to try to run it or to tell you how to do it. What we're good at doing is helping entrepreneurs, providing capital, providing network, providing feedback and guidance. But you as the entrepreneurs are the best source of the ideas. And if you're looking for an investor to come up with the idea, then you're just going the wrong direction.
I'll give you a filter. If everyone isn't telling you you're freaking crazy, then don't do it. I'm being honest, because that just means it's a feature. It's just a little incremental add to the world you're living in. It's got to be like, what? And your friends say you're stupid, and your mom says go back to school, stuff like that. Then you're onto something. Don't be too early. If you'll be too late, because when people are saying it's not crazy enough. So I'm being somewhat joking but serious. Is the Valley? I've been doing this for a while now. Not Fantex, but startups. And these guys, I'm sure, will iterate. They see the incremental off of something else all the time. And investors want to be like, they're going for the home runs. They're not going for the singles. So it's got to be a little bit crazy.
Yeah, I'll retweet what everybody said. I think totally agree.
Awesome. Just to drill down on the why be crazy thing, is that because if it's just iterative, it's not going to stand out enough and customer acquisition is going to be a pain in the ass? Or at a high level, why do something completely different? Why not be 10% better from a growing huge business standpoint?
10% better does not get money from these guys at all. So one, you better have a lot of good friends. Two, differentiation in the marketplace is massively difficult. My first company, 96, e-commerce, it was not like it is today. Now, it's free to market through social media and everything else. It's so noisy and so confusing, even when you have billions of media impressions, right? To break through the noise is massively difficult. So if you're just like a little better, you're going to get lost.
Yeah, and I think more so in sports, actually, because if you're in some other fields and you do have something that's incremental, there's probably an investor out there for you, because a lot of these other verticals, there's dozens of investors. Unfortunately today where we stand as a sector within sports is there are not dozens of investors. There's just a handful of them. And so given how small that universe is, no one's looking for number 3, right? In other spaces that are big, there are investors who are willing to say, hey, if I structure this right, I price it right, this is a good investment, it's incremental, but I can make money here. I didn't have the chance to do the guy who was going to be number one, so this is okay for me. That's just not the case in sports. So I think Buck's right in how you have to think about it in this space.
Great. All right. Questions from the crowd. So what's the impact of cryptocurrencies, like, for example, Bitcoin, on the sports landscape?
I think it's going to have a huge impact. I do. At the end of the day, it's about creating frictionless commerce. And so I would be surprised that Bitcoin isn't adopted more broadly in the future. There's too much friction in getting cash flows around, whether it's what we're doing or buying tickets or what have you. So no, I think it will gain mainstream. The question always in any of this is, the crazier you are, the harder it is to pick your timing, right? Because you ultimately do need mass adoption for people to create sustainability for your business.
Yeah, I agree. We were actually just talking about this over there earlier. In the gambling space, and also with the passing of the Jobs Act, I think when you talk about cryptocurrency, I think there's going to be a major opportunity to start anonymously doing things that's going to take down borders. And in the U.S., and particularly around gambling, there's kind of a state-to-state thing, and there's an opportunity for that to just sort of disappear. So I think it could turn into a big opportunity.
Okay, I think the question is, how will wearable devices impact real-time communications between players and fans?
Yeah, there's more and more data, obviously, that's being collected through a series of means, whether it's wearable or the stats-type camera systems that are installed in a lot of stadiums today. That data is going to become more and more readily available to fans. So that's already happening and will inevitably continue to grow. The other communication link back is something that has been explored from time to time, but I think many, call it operators, on the sports side, are worried about having that unduly influence outcomes and whether it has an impact on outcomes. And that's really the tension there. I know a couple of leagues that are looking at ways of trying to increase their social engagement, but yet at the same time not have it impact the live game outcome. And so we haven't really figured out the right answer to that yet, but people are thinking about that and trying. Yeah, I mean, one of the investments we have, I'll share this with you, we bought the league. That's one way of going after it, right, is for a new auto racing series. It's an all-electric version of Formula One racing. And the vehicles have the ability to electronically be controlled naturally because they're battery powered and computer controlled, is to give the driver an ability to boost their power so that they can pass. So one of the things we've looked at and experimented with is, well, can you let fans vote real time to give a driver an increased ability to pass? Will that make the race more interesting? Will that be more engaging? How do you balance that against the tension? Well, not to pick on it, but you got a Brazilian driver and they just have, huge nationalistic following of those drivers. That driver's always going to get the advantage. And is that fair? Because
it's like Yao Ming in the All-Star game, yeah.
So it's a real-time example of what's going on right now, debating those kind of issues. So.
I would just add, beyond the big sports and maybe the live event experiences, I think there's whole new channels of content that can open up, maybe in the off-season when it comes down to athletes training, athletes being their own brand, athletes creating content to connect with their fans even in the off-season, who's doing what from a training standpoint, how is somebody's injury recovering in the after some situation on the field. So I think that wearables and sensors can create whole new avenues of content that can be monetized or used to just deepen a fan engagement. And more sports are probably, there's a strong difference between the sports that might not do that first, like maybe a motorsports event when it comes to the actual heart rate of the driver. I mean, you can imagine some catastrophic situations where that wouldn't be a good idea. But there might be other types of metrics, measurements that can be taken, and certainly outside of other sports beyond the motorsports reference, where it would be interesting and compelling.
Okay, it's funny because I was on Twitter last night, and I think Kerry was on a panel where he had a funny comment about this last night. So I think I know what he's going to say. But what are your guys' thoughts on the daily fantasy space?
So the comment that I made last night was and this is a fact, I get pitched on a new daily fantasy game at least one a week. And it comes from everywhere in the world, and it happens all the time. And I love it because I think it's a tremendous space. I think there's a major opportunity. So I'm a big believer in it. We have, with Mr. Ross's affiliation with the league, there are some concerns about our direct involvement, but we love it as a team. We love the engagement it drives, and the numbers are incredible. I mean, I think, yeah, it's from just like a lifetime value of the customer and from the pure business model standpoint, it's a liquidity play, so it's hard. You need a lot of capital, and you see they're sort of filtering down. There's 3 or 4 players now in kind of one tier that have, in some capacity, sort of priced themselves out of acquisition. Then you have a middle tier of people who are knowledgeable in the space and are theoretically, as the bigger players get into it, probably ripe acquisition targets. And then you have a whole layer down at the bottom, and this is a lot of what we're seeing now, which is the players who are involved in the space currently tend to be the guys and gals who got cut off from playing online poker, and now so they're pure gamblers, right? It's like people sitting at home with spreadsheets, and I, as not a hardcore gambler, go into these things and I'm turned off because, one, the aesthetic is wrong. It's usually black and green. It feels like I feel weird looking at it at work. Like I'm concerned that somebody's going to say something, and I get just pummeled. Like I'm terrible at it. So I think there is a big opportunity. I think that's probably the next thing.
So given the, as you talked about, these are marketplaces. You need to get to liquidity, and full disclosure, I was invested in one of these. FanDuel's raised a lot of money. DraftKings has raised a lot of money. If you're a startup in this room and you've raised under $1 million, are you too late?
I was going to say, I think you're touching on a very important point. I mean, are you too late? You're too late to do the same thing that those folks are doing, right? So you have to find some really unique angle, in many ways, back to what was said earlier, because the capital needs. I mean, what Kerry said is exactly true. It's great. It's got a lot of great aspects about it. We've seen a ton of them as well. But the thing that's been proven so far is that the customer acquisition costs have been very high, right? And although there's this modeled lifetime value of the customer, it hasn't necessarily been demonstrable to date in the same way. Mm-hmm. And the hope is that that's going to translate not only into continued monetization through the daily fantasy games, but exactly to the point of when the states come online with their gambling, that those will be a good customer base, or there'll be enough overlap that you'll be able to additionally monetize them that way, right? And right now, as we know, it's just Nevada for poker, and New Jersey's got some other table games, but that's the extent of it, and most of the legislation has slowed down for the time being.
Okay, what do you care about for early stage investments?
So the team can't be made less important. It is so critical. The founding team, is that what you're talking about? The team of the founders? It's critical. The DNA of the founding team is one of the first things that we look at. Not only what have they done to date, but also how do they flinch when we ask them tough questions? Do they look at you with just complete despair when you challenge them, as though, like, how could you not get my good idea? And we actually like that. There's a little bit of, dare I say, piss and vinegar in a founder that really believes in what they're there to talk about, and can defend it on all sides, all points, and maybe even have vision bigger than us on this side of the table. So that's critical. The network, I think, a lot of innovation, especially here in the Valley, we don't necessarily expect a founding team or a startup to have a vast network, especially in sports. There's no doubt that they're probably sports fans and very passionate, but that's not good enough. I can't tell you the number of times somebody sits down and says, I'm a sports fan, I created this business. It's like, wow, you kind of lost me with that first part. Because it's not just good enough to be a sports fan. You've got to have business relevance. You've got to have something that's disruptive and solves a real problem. Traction, I'm sorry, can you, Sally?
Traction, yeah, that's the other one.
Traction as far as their market traction, penetration with their product, yeah. So for early stage, and let's just say seed is maybe 1 to 2 million at the most, and below would be then a seed, angel, or friends and family bucket. And so we're focusing on that. Not a need for revenue, not a big issue at that point. It's more about, is there disruption? Is the technology proven in some way? And then do they just need money and some access to the industry to really accelerate?
I think he's asking, how are you investors finding the big ideas?
Yeah, I'm on a plane all the time, always going out, coming places like this, meeting with people. It has to be proactive. It doesn't. It's not a business model that works if you're reactive, because then you're always behind. So got to be proactive.
Yeah, I would agree. The same for us. You can sit back and wait for things to come in, but the best opportunities are, and it's our job, is to go out there and find them. And for the most part, they're either things that we've found or that we've invested in, or they're things that came to us through people we knew. You know, it's fine to do and completely appropriate to do a bit of the cold call. You know, to walk into an investor if you can, or send something to an investor that you don't know. But that's going to be at the bottom of our stack of things to pay attention to. Relative to if it comes in from, ideally, you're somebody we already know, but at least one degree of separation, somebody we know knows you. That's the way most of them end up connecting.
I would agree, and also just a highlight for us, we are small, we're nimble, we're athletic, and so we rely on a lot of those same principles that an athlete does as far as being proactive and bullish in moving quickly, staying focused. A lot of those athletic tendencies just naturally come out. But it's not always what you know. Sometimes it's who you know, to Mark's point about the network, especially here in Silicon Valley or in sports. And I also think we wouldn't be on a panel like this or going to some of these other events if we weren't open to new ideas that can come in from anywhere. Sometimes they wash in over the transom. Other times you actually have to create an opportunity. And that's one of the things that we're positioned to do, is look across Silicon Valley disruption and look for business relevance for sports. It might not be something that the founders of that particular company had in mind, or they might not realize that something that's relevant for a consumer good in some way could be relevant to a sports fan. And so we do look the other way around. So not just looking always through the sports lens, but looking through best practices in other industries across an array of sectors, and being able to identify a nuance and exploit a market potential for sports.
Yeah. So opportunities with college sports.
I'll let somebody answer the college sports one. I'll just defend cricket for a second. It's probably actually the second most popular sport in the world. Second most watched sport in the world, behind what we call soccer. So it's worth paying attention to.
And 20 by 20 has been pretty successful, right?
Yeah, 20 over, 20 unders, yeah. So the Indian Premier League and more of those formats. So cricket's big. That being said, I'll kind of stepped in there. I'll let somebody talk about college.
Yeah, I think sort of what you were alluding to with these, like the Big Ten Network, University of Texas Network, Pac-12 Network, I consider those to be major sports. And when I think about the sports space, I put those in the same context as the NFL or Major League Baseball. I think there's a second and third and longer tier where there are possibilities. It's not something we focus on. It's a little fragmented. It's hard to get in. The rights are all spread over the place. But there are opportunities there, and you're seeing like Silver Chalice is doing some work in that space, and there are other groups doing it.
We're not going to be able to invest in Northwestern football players anytime soon.
Through Bach,
Yeah.
If my fellow co-founder Dave Byrne was here, that's his goal, that eventually solves the Title IX problem. I'm just focused on professional sports right now.
Yeah, I'd like to follow on actually a comment that Kerry just made, describing the lower tiers of sports. Third and fourth tier is fragmented, not very interesting. There's a broad market of participatory sports in the established sports that aren't necessarily these new growing markets. For example, youth, school, adult, semi-pro. What does it take to get your attention in those things? What is it that you consider valuable?
Yeah, and there are a lot of companies out there that are doing a good job. You know, if you name any of those segments, we can collectively tell you about some good ones, you know. There are people doing some very interesting stuff in high school sports. You know, that's kind of seen as the next frontier now that college has largely been done, not entirely, but largely been done. There are people focused on the sort of amateur. We've talked about participatory sports. There are people doing, you know, again, really micro-targeting little sports. Many of them very successful, you know, and you can see them across the board. For us, we're looking for ones, again, that have proven their model a bit. We're not, candidly, as much as I like seed and startups, and I've done a lot of those over the years, that's not what we're looking for in this space. But all of those areas, people are doing some really great stuff.
That's kind of an interesting point. So in terms of sort of, like, your fund's fairly new. When did you do it the last couple of years?
We raised it last year.
Okay, so you raised it last year, and you're obviously experienced investors, so you had to decide, what point are we going to invest? Where's the opportunity? You decided sort of more of a growth equity, later stage investing was where you guys thought you could add value and where your investments should be. Why was that point where you thought the opportunities were as opposed to an earlier stage?
There's no doubt that early stage, if done right, can be highly rewarding. And frankly, it's more fun and it's more interesting. But unlike, and having been in a number of different verticals over the years, private equity firm in the 80s, tech firm, doing healthcare after that, those spaces are largely filled out. You can find investors who are focused at every single stage of the process, all the way through public, crossover, you know, hedge. There's players. It's a very efficient market. You know, our assessment of sports is, again, although you can be highly rewarded if you pick right at the seed or startup, is we don't, for the risk reward, we felt kind of more of the growth and expansion stage investing was the best place to be. It was the best risk reward. And at the end of the day, for better or worse, what we are as investors. And our job, as much as we're there to help you, I hate to say it, is to make money for our partners and our friends who are invested in the fund. So that's the answer. We just felt that was the best risk reward. And we had the kind of whole landscape. It wasn't as if you went into any one of these stages, seed, startup, you know, later stage, whatever, growth, where you had to compete against a dozen other firms like you do in, you know, most of the spaces
Consumer
today.
tech, right?
Yeah.
So. Interesting. I think that's a great question. Just to broaden it a little bit, I think the interesting question is, like, so, I mean, the Aero case has been something that the leagues have talked a lot about, basically sort of enabling over-the-top distribution. And there is sort of a lot being done on kind of alternative distribution methods. You know, a lot has been written about a la carte versus bundling and cable. What do you think distribution is going to look like 30 years from now? I mean, there's 30-year TV contracts right now, which is insane to me. But maybe there's a good reason for it. And what are your guys' thoughts on kind of distribution of content in the future?
Yeah, I think it is going to evolve. We're already seeing that. As you said, there's Netflix and Hulu. It's going to be the bigger, higher profile sports that'll be last. Today you can already, there are Netflix versions for, my son's a cross-country runner. Believe it or not, I pay for him $12.99 a month so that he can watch live cross-country races. Okay? And that company has been doubling every year and is highly profitable. Okay? And it's high school and college cross-country meets. Just about any of these small sports, there are those already. There are no reporters here, or if I could at least ask this to be off the record here. I'm fine with you pirating that data, because someday I hope you're going to be in a social economic group where you're going to pay for my product, right? I think that's great. I think it's great to have consumers who get hooked on the product. That's not a public position, but someday I hope you'll pay. And I think a la carte for sports is just fine. In fact, it's great. I think the challenge is really around a la carte is going to impact those rarely watched or fewly watched channels where the economics of being bundled keep them alive, but when they go to a la carte, they won't be able to operate. Sports today, if you unbundled it, although most of the providers, the distributors, don't want it, they require that we package our rights together, our live games with our digital rights, our broadcast rights with our digital rights today. That's very important to them. And they try to offer it sort of as TV everywhere. That would be fine as a la carte. You know, take an example, the NBA, right? Comcast pays about $3 per subscriber per month for the local NBA team, okay? That's what you're seeing pass through on your bill. That's real money. On the other hand, that's a great bargain. How many games do you get to watch in a month for $3 versus the cost of going to a game? I think that's a great deal for the subscriber if it went to a la carte. If you paid the full boat that Comcast is paying the team to get those rights, that $3, that's a pretty good deal for you. And we would be just fine in an a la carte model. We'd probably, unfortunately, charge you more than $3, and you probably pay.
Yeah, I would completely agree with that. I think you'll see it. I think it's starting to happen now, and because because live sports is the linchpin of the entire TV industry, which is a huge $70 billion industry, like that, it's going to stay there for a while. But the leagues have carved out out-of-market rights for digital distribution. There's some questions about what format it can be consumed on, if it's tablet or if it's phone or what have you. But I think, you know, keep watching, keep listening, and you'll see something come up in the near future. It's gonna evolve, and it has to for the entire industry to survive.
Great. First of all, great content, great answers. Big hand for the panel, first of all. Okay, thanks so much to all the panelists. Also, thanks so much to our host, Stripe, to our wonderful sponsors, Sports Data, Onside Sports, Play On, Buyer's Best Friend, and Pogo Seat. Thanks again, everyone. Hang out, have a drink, and thanks for coming.